from one of my partners' house, Mr.
Oh,
Sunil Shah, very
okay.
long back, very
Okay.
long
Okay.
back. That is the small connect I have. Sapnil, again, a very good friend and brother. Very good evening. Thank you for the brief. And as I see, there are many friends, but in one particular order, Kamal Bhai, very good evening. If you are there listening to us from Guwahati, and he happens to be the past chairman of Guwahati also.
Yes.
Thank you once again. And today, when I was conceptualizing how to take this session forward, and today we have three topics to deliberate on. I'll touch upon those three topics, basics, and try to give my insights how these three topics are relevant practically while you discharge your assurance function. And one memory came to me very profoundly to start with confirmations, external confirmations, and it was the year 2009. Though this standard is very old, but the profoundness and the degree of relevance came in 2009, and today, unfortunately, we lost somebody who is connected to that 2009 event, Satyam.
Correct.
And out of many elements, external confirmations was one of the key elements missing in that entire episode. And what a great journey to celebrate, to remember, and to start this session with. So I will say that this way, that we have lost T.N. Manoran. He is somebody who is going to live with us with his wisdom and with his leadership, what he has demonstrated over these 40 odd years. But yes, of course, the day to remember on different ways. So with this note, I'll touch upon three standards, and these three standards, out of three, if I say external confirmations, which we try to implement in our day-to-day assurance functions, and two
Sorry to interrupt you, Sutar.
Yes.
Any possibility of improving the volume?
One second, if I can. Here, actually, it is running very bad. Okay. Hello. Hello.
Earlier it was better.
Earlier it was better. One second. Is it fine now?
I think previous you can remove the earbuds and
Earlier it was better.
Earlier was better. Yeah.
Okay. Now outside it is running very bad.
No problems. Carry on, please.
Okay. So out of these three standards, as I said, external confirmations is something which we try to implement in our assurance day-to-day functions. But when it comes to subsequent events and when it comes to going concern, I might go wrong, but this is my hands-on feeling from the ground zero. These two particular standards we many times overlook. I'll say why we overlook many a times, and in today's context, even all these three standards are interlinked some way or the other. But there are lot many changes and lot many happenings around these two remaining part of the standards. So we'll go one by one. When it comes to external confirmations, one bit of information from the institute side. We've been hearing from the institute also that they are trying to create a platform wherein the auditors will start getting external confirmations directly from the stakeholders, and they are intent to start with as early as possible, to start with from the banks. And if this platform goes fruitfully, and if this platform goes very positively in the right direction, I think assurance function, what we see in this country, is going to go in a very long positive note going forward. So this is one piece of information which the institute is doing, and the institute is doing rightfully. And a lot of activities are going on in this regard profoundly. Now, coming to external confirmations, and when you talk about SA 505, normally we keep our confirmations, we keep our function restricted to one piece of document without giving much of a thought how we got that piece of document and in the manner in which we got that piece of document. Because end of the day, normally again, compliance of auditing standards, of late it is taking the kind of degree it required in terms of our assurance functions. But again, auditing standards, we always been overlooked area by in general. And today, of late, we started giving its relevance at due course. So when you talk about external confirmations, it talks about three different aspects very profoundly. One is it has to be from independent source. Second, it has to be direct. And third, it is the documentary form in which we are receiving it. So many times what we do, we ensure the documentary form, but the first two element, we don't give much of emphasis. One is the direct and the independent source of it. Many times what happens, we request the client, you get us the confirmations either from the bank, from the vendors, from the stakeholders, and we take a copy of it and keep it in our file, which is absolutely not in spirit of the requirement of this particular standard. What the standard talks is, you get the confirmations, you seek the confirmation directly from the stakeholders, be it from your vendors, from the banks, or any party related party. Directly you get it. You ensure that seeking of information, getting those informations, communicating with those parties are absolutely direct and independent of your client. And if there is a client coordinating this, you have absolute control on the process part of it. And finally, the kind of confirmations you get, it has to be documentary evident, either in the form of electronically or a physical form of it. There are a few things which we need to think of it, and there are few things which are very critical in understanding those aspects. Normally, when you talk about direct external confirmations, two things: positive confirmation or negative confirmation. Normally, in audit parlance, we also talk about closed confirmations, open confirmations, all those things. But when you talk about the language of the standard, it is all about positive confirmations and negative confirmations. Again, since we, over the period, we overlooked application of auditing standards, there are lapses in understanding, appreciating these concepts, and there are many times we overlook the application of these concepts. Now, let me take you slowly into deep diving about what is the concept of positive confirmation and what is negative confirmation, and how you deal with in two different aspects when the subsequent events takes place. When you talk about positive confirmations, normally it's a manner in which you request that the confirming party respond directly, indicating agreeing or disagreeing to or providing the requested information. For example, I have a debtor balance of say 1 CR on the given reporting date. If I'm requesting the receivable party that can you confirm that your receivable balance with this particular my client is 1 CR on this reporting date, and also confirm if you disagree with this. So now this typical language and this typical mode of seeking confirmation from your receivable is called positive confirmation, wherein in case of negative confirmation, you request the party in case the party disagrees that with that number, then he need to confirm, otherwise it is not required. What it means? Normally the reliance on confirmations are high, and when you go for positive confirmations, the standard says you always go for positive confirmations when the degree of risk is high and the degree of reliance on the independent source is high, and the materiality level is high. So it is not necessary that you go for positive confirmations always in all aspects of your balance confirmations. You may think of going for negative confirmations where the balances are small, where the sample size are very large, and there is heterogeneous in the sample size. But when the degree of risk and the materiality on a particular balance aspect is high, in those scenarios, you can think of going for a positive confirmations. Otherwise, you can restrict yourself with negative confirmations. Now, what is the implication of going into positive confirmations or going into negative confirmations? Now, if I try to analyze in a very bullet point, of course, I'll be post the sessions. Normally, I don't share PPTs while delivering the sessions. I'll share all the PPTs related to three standards once we conclude the discussion today evening. So, if I try to summarize you this positive confirmations, negative confirmation, the pervasiveness of the evidence or the degree of reliance in case of positive confirmation is very high, whereas in negative confirmations it is low. The risk environment in which we operate with regards to positive confirmations, again, the high risk and we can control. But in case of negative confirmations, when you are going for a negative confirmation, in those areas, basically the controls are very strong and the risk areas are very low. So like if I say, when you're trying to go for getting confirmed your contingent liabilities or in terms of bank guarantees given by your holding companies, or if you want to confirm a very high figure lease which is impacting your financials, or if you are going to go for a litigation confirmations with one of the stakeholders, here the risks are high. So in these scenarios, you always tend or you should always go for a positive confirmations. But in general cases, like when you talk about debtors, when you talk about payables, invariably we go for negative confirmations, and we seek if the information, if you are deviating with or if you don't agree with the informations or rather the balances, you go for negative confirmations. Now, when it is appropriate, as I said it, now you think about the implication side. Normally, when you ensure that completeness of your stakeholders, that these are the parties from which I'll be seeking confirmations, you ensure that the completeness of the communication channels are foolproof, that their email IDs are relevant to the parties from whom you are going to seek the confirmations, all those things. Once you ensure, then you post a mail or you did a communication, physical communication with those parties. It is not necessary that those parties respond to you. It is not necessary those parties respond to you, because in with respect to getting external confirmations, sending confirmations are under my control, but getting confirmations are not under my control. And in a typical audit scenario where timelines are very tight, you cannot wait to get those confirmations as you go ahead in concluding the audit for long. You need to conclude your audit. There are deadlines to be met. So please ensure that once you ensure the issuance of confirmations, you follow up with those parties to whom you have sent those confirmations. But here the challenge comes where you don't get the responses in time, or you don't even get the responses. Now the critical challenge is to interplay with what kind of confirmations you have sought from those parties. Is it positive confirmations or negative confirmations? So be clear while sending those confirmations. Depending on the degree of risk involved and the degree of controls involved, you issue the right and appropriate kind of confirmation. Where the degree of controls are very strong and risks are low, ensure you send negative confirmations only. When the degree of risk are high and controls are low, send positive confirmations only. If you, why I'm saying this and why I'm stressing very profoundly on this aspect, in case you don't get responses to positive confirmations, what the standard says, the kind of subsequent testing you do is very limited. It is not allowed to do subsequent testing in case of positive confirmation areas. For example, if there are, say, large value items or large lease cases where you are not getting, you have sought for a positive confirmation and you are not getting a confirmation, what the standard says, you think of modifying or putting your remarks in the auditor's report. You cannot restrict yourself by doing a subsequent testing. When I say by doing a subsequent testing, what does it mean? Suppose in case of receivables, you have sent for a confirmation and you are not getting the confirmation by the time you are supposed to conclude the audit. You can always check for subsequent events like the realization from that party. Suppose, for example, in the month of July, I am doing the audit of previous year 24-25, and I supposed to close my audit by say August 10th, and my board is say on 15th. So I need to conclude all the processes by say August 10th. So I cannot wait beyond August 10th that whether I should receive the confirmation or not, because there are a lot of activities to be done based on the confirmations and the information containing in those confirmations. Now I need to take a call in my audit process and audit timeline by what time I should, till what time I should wait for those confirmations and what the team should do after that time is reached. Suppose my cutoff time is say tomorrow, by August 1st, I should get those confirmations. In case I'm not getting those confirmations, say by August 1st, by tomorrow, I'll be doing this kind of activities. Suppose tomorrow I'm not going to get those confirmations, then what I should need to do? So in case of a typical situation, say receivables, I have sought for say from 50 parties, I sought confirmations from, and out of 50 parties, 10 parties confirmed me. In case of rest 40 parties, I have not got any confirmations. Now, what best I can do through my substantive testing is that need to check the financials or the books of account of that client till now, from say 1st of April 2025 to 1st of August 2025. And in this period, during this period, I need to say that whether the realization against those receivables which are standing on 31st March 2025 got recovered or not. If there is a recovery, then there is absolute form of that, making sure that those receivables standing on 31st March 2025 is good. This is one way of doing subsequent testing to confirm that your balances of what is appearing on 31st March 2025 is absolute and true and fair in context of your financial statement. But what happens with positive confirmations? You don't have that liberty of doing those subsequent testing because, as I said, positive confirmations can only be sent in high risk areas where controls are low. In case of payables and receivables, where you have strong controls where the risks are lower because these are the running items and it's very large sample base, there you cannot send out positive confirmations. You always ensure you sending out negative confirmations, and you expect negative confirmations to be confirmed by the party only when there is a deviation from what the information or what the number you have mentioned in those confirmation letters. Suppose the party is not confirming, that means by virtue of negative confirmation, it is getting confirmed that whatever information you have sought from the party is agreeing to this without responding you back. So that is that element we should take care of. And being an auditor's profession, we should ensure that we maximum cases we issue negative confirmations so that we are safeguarding ourselves from all ambiguity. But again, as I said, ensure that in high risk areas where controls are very low and which are very material. Suppose a balance item is one particular item is very critical to your entire financial statement. So in that case, you always ensure for getting positive confirmations. And in case you are not getting the confirmations, think of evaluating that position by discussing those who charged with governance and think of modifying under SS 705. These are more or less about external and negative confirmations. Now there are situations where you'll get information or the confirmation from the stakeholders, but those confirmations are not in line with, because many times you see that whenever you seek confirmations, you would have sought confirmation on a particular balance item, but the party would have sent you the entire GL items. The party would have sent you the copies of the bill. So in those situations, as an auditor, what you should do? Now, again, as an auditor, what we should be doing is, in those situations, try to compile those informations and try to figure out what is the deviation in those numbers, and try to figure out those informations which you got are whether those informations are relevant in context of your audit for that particular period or not. Once you figure out and summarize those informations, try to discuss it with the relevant function heads and try to discuss with the management so that you can have a relative reasonable conclusions over those items. So external confirmations per se, broadly, ensure that your confirmation modalities are absolute direct. Ensure that the information you are seeking, the persons from whom you are seeking, and the communication details are absolute wholesome and 360-degree correct. There are many ways of correcting it, and ensure that while receiving these are happened with us in few of the clients, wherein normally the scenario is right now today is that the client says that at the last minute, because you're supposed to close your audit files, the client says these are the confirmations the client has by mistake, even though they're supposed to send you directly, they send us to us and we are forwarding it to you. So in those scenarios, don't accept those confirmations as it is, because many times you never know what is the intent of that client. Sometimes when you receive a communication and forward that mail, you can always change that content or the attachment. You never know whether the client has changed that attachment or not and send the attachment of confirmation which is in line with the balances. So those risk factors are there. So ensure while getting external confirmations, absolute directness in all the channels of or the stages of getting external confirmations. While sending confirmations, make sure that you send appropriate confirmations in terms of negative confirmations or positive confirmations. Refrain from sending positive confirmations unnecessarily unless otherwise it is warranted. In general practice, go for negative confirmations only. Where it is required, in the few cases, positive confirmations are essential. In those cases in particular, go for external confirmations in positive confirmation way, but ensure you comply the requirement of positive confirmations very diligently, because this is very harassing in the auditing processes. So the avoiding of positive confirmations in general is wise, and always avoid sending positive confirmations in general. So this is bit of on 505 when you send external confirmations. I'll touch upon few aspects on external confirmations on the reliability aspect while we are discussing going concern, because I thought out of these three standards, so it's been given to me today to discuss with you. 570 is something which we should be worried about in today's scenario. There is a question from one of the members, if I can take it. When can go for open and close end confirmations? See, technically there is nothing called open and close end confirmations as far as standards are concerned. It is positive and negative. Normally we refer positive confirmations are open confirmations, and negative confirmations are closed-end confirmations. So as I said, where the degree of risk is low and you have absolute control over the processes, you go for closed-end or negative confirmations. And negative confirmations means if the party agrees that whatever numbers are mentioned in the communication is not required to respond you back, that means that external confirmation process is over. And in case the party disagrees with the information or the number mentioned in that communication, in that case only the party has to come back and say that, look, this is the disagreement I am having. But in case situations where the risks are high, absolute high, and controls are absolute low, in those few cases, go for open confirmations or positive confirmations. Now, coming to SA 570, specifically why I'm touching this standard and would like to take some amount of time. Lot of things are happening right now, and especially post-COVID. This standard has taken a seat front. And if you evaluate this standard in context of global scenarios, recently, very recent, the international auditing standard got revisit, and 570 they have issued the revision version of it, which is going to be effective, to my knowledge, I think December 2026. And still there are few things again they are looking into. And when you talk about going concern and when you talk about the financial statement and the audit of financial statement, probably this is the one of the core element on which my entire accounting disclosure and audit is based on. If you remove the going concern aspect from a financial statement, the way I need to draft the financial statement, the way I need to audit those financial statements will be altogether different. Altogether different. But when you add the element of going concerns, which is in general, when you go and approach any client in terms of audit, we accept by default that the client is going concern and the accounts are prepared on actual basis. This is the by default acceptance wherever we do. But in today's scenario, you need to understand the going concern aspect of that particular client, particular business, of the particular division of that client with a pinch of salt. I'll give you one example. It's a little long back, and I was doing audit of a pharmaceutical company. And that time I was just taking my baby steps into the profession. And that pharmaceutical company was into generic medicines. And they're operating in India, and their R&D team was over, or the production team is in India. So while doing the audit, one of the information what we got is that they are doing test, because once you roll out for human consumption any particular medicine, that has to go for a very stringent test and laboratory test, all everything. So the piece of information we got is that if one of the test situations they do application of those medicines under R&D on human bodies, not animal. So these informations we are not sure of what is the accuracy and the degree of correctness of this information, but this is the piece of information we got during the course of our audit. And when we escalate this information in context of regulatory requirement that time, and the regulatory requirement of globally and regulatory requirement in context of that particular company to the partner, it was like we had taken almost 15 days time to deliberate on a aspect of going concern, because you are ending up at a situation where something is not legally allowed and the company is doing it, and the outfall of this is humongous. And tomorrow, if that is going to go out, I'm not talking about on the proprietary side what I should have done, but think about a situation where one particular aspect of your doing or one aspect of your entire business is going to be challenged and entire business is going to collapse. So at that particular moment, how you evaluate your opinion forming about that particular client or the audit function for that particular year is going to with a big question mark. There could be many situations. Post COVID, we know how things have evolved. For friends, when few of you might be doing, or most of you might be doing index clients where index is applicable, and one of the part of the disclosures, we it supposed to disclose the concentration of our receivables and stakeholders. You think about a situation where a company is selling an entire of its receivables and revenue is concentrated, 90% is concentrated among 3, 4, 5 clients. And out of these 3, 4, 5 clients, you find out that out of 5 clients, 3 clients are interrelated and related party concerns. What implication it has if one of such client is going negative and you are doing the audit of a particular one of the company where the receivables are parked in those clients, whether it is going to affect your going concern or not. The entire thought process of evaluating going concern is going for a change. And it's supposed to go for a change because the degree of evaluating this going concern in India right now is something which is supposed to be done 10 years back. We are not looking at the current SA 570. I'm sure I'm in my personal capacity supposed to get revised and should be get revised sooner. The earlier it is better. And why I say that it's supposed to get revised, because globally already the change has taken place and has happened. Now to take you, I'll tell you during the course of discussion that what SA 570 is all about right now, what the international 570, what change has happened this year, and comparatively where we stand, that also I'll take you slowly. Now coming to 570, just a second. There are few objectives we need to look into. And out of, if I summarize the objectives with regard to SA 570, there are broadly 3 objectives we need to look into. The first is the evidence and the conclusion. And the evidence and conclusion with regards to whether the company or the financial statement you are auditing with is going concern or not. This is the primary evidence and conclusion you to draw. And either way, yes or no, will going to direct the entire shift of your audit process and entire shift from opinion formation. How you are going to, second objective is how you are going to assess the material uncertainty assessment, how you are going to deal with it. And the third is the reporting compliance, what is envisaged in this particular standard. Now, as I said, when you talk about going concern, and it is very subjective, and this subjectivity has to be evaluated based on the conditions attached to the events which are trying to trigger your going concern of that entity. When you try to evaluate those conditions attached to one particular or 2, 3 events which are going to trigger your going concern evaluations, there are few factors or the indicators you need to evaluate. And if I summarize those 3 factors, it could be 3 broad factors. One could be your financial factors. Second is your operating factors. Third is other regulatory factors. So if you talk about financial factors, which broadly indicates these conditions of material uncertainty, could be net liability, net current liability and net liability positions, fixed term borrowings approaching maturity. Suppose, for example, you have a huge cash outgo is going to happen over next 3, 4 years, but you are not envisaging your cash flows, inward cash flows that way, that which will sponsor those cash outgoes of your long-term borrowings. That could be a situation the company is into huge capex mode over last 3-4 years, and the moratorium period is going to get over. But you are not able to figure out that your inward cash flows are going to match your outward cash flows, which you are supposed to go to repay those loans. So this could be the indicator of your going concern aspect and what kind of measures you are going to take it. Say, for example, continuously you are having negative cash flows. I'm not saying negative cash flows are bad. Depending on the situation of that company, of the life or the stage of the company where the company right now stands, there could be a possible genuine reason of having negative cash flows. But are those negative cash flows are going to challenge your going concern aspect tomorrow? If yes, you need to evaluate. If no, you also need to assess yourself and confirm yourself that yes, these are the situations because of this, the company is having negative cash flows or expecting negative cash flows for forthcoming 3-4 quarters. But after that, they have a solid foundation to have positive cash flows, which will cover up all the losses and the company is good to go. So in those scenarios, if your assessment, the factors which are involved in those assessments are proper, then you can take a call that this company is absolute going concern and you can go ahead with your opinion formation, whatever you like to. But if your assessment or you are having a doubt on these assessments that tomorrow, even though there are persistent negative cash flows of the company, but tomorrow you are not able to see that positive line that this negative cash flows will get recovered and get positive, then you need to take a call whether going concern aspects are going to affect your judgment and at the end opinion formation. So all these things are there to go about it. But what more important, I need to tell you that more than financial indicators, more than operating indicators, the other elements which are there is going to play a very pivotal role in assessing going concerns. And normally, as an auditors, we overlook it, or normally in India right now, we don't talk much about it, other indicators right now. I'll give you one example where we are not talking about. If you talk about a business life cycle, and when you correlate and try to correlate that business life cycle with your company, say for example, in an era of say we are totally moving ahead with EV or technology. When you talk about technology, the advancement of technology is very quick, thin, and fast. And the companies working with it might be having a solid cash flow right now. But unless their R&Ds are very strong, you never know when they'll get outspaced tomorrow. There are situations where we have seen typically when we discuss about technology, when you discuss about impairment, when you discuss about going concern, one of the very general example we bring in is Nokia. How Nokia got outsmarted by other players. Think about that situation. That is one situation. One company got outsmarted by something because of technology. But today, where technology is changing every day, forget about a cycle of 5 years or 10 years. Now, every breakthrough is happening just next day. So when a breakthrough is happening just every next day, you think about the company you are doing the audit of. If their R&D is not that forward-looking, if the R&D is not that strong, you don't know whether that company will last that much of year or not. So evaluate that situation. And these kind of situations are not necessarily to be your operating indicators or financial indicators. It could be other environmental indicators in which the company is operating with. Same with pharmaceutical companies, same with all first age, new generation, new age companies, wherein today they are very small, tomorrow they are going to be very big, and day after tomorrow they are going to vanish. And we have seen it. One of the examples I can give you recently, which has happened with related to Blue Cap. Think about this company. Couple of months back, this company had a great valuation. This company had making all right kind of noises. And today, if you think about this company, is nowhere. And think about the auditor and think about the assessment of going concern aspect last year, 23-24, this year, and going forward. There are many fintech companies. They mushroomed, few sustained through, few are right now no more. Think about assessment of going concern aspects of those companies, what would have been done, what we can learn from, and tomorrow, while actually myself doing the audit of this kind of companies, what I should do. So these are very subjective aspects. And while you evaluate or assess the going concern aspect of a particular company, don't restrict yourself with respect to evaluation of only available and visible indicators through the operation and the financials. Rather, always look around and move your eyes in here and there to see the other elements and other factors which is impacting that industry at macro level and impacting your very company at micro level. If you do that, then I'm sure that as a function, we are reasonably at the right space and rightfully protected in while discharging our duty. Now, if I try to cover up and combine what globally we are heading to and where SA 570 in India is standing and what differences globally are going at, you will find that yes, these changes are required and it is relevant. Now, when you talk about assessment of going concern while doing the audit, one fundamental aspect to keep in mind is that I'm doing the audit of a historical information and I need to assess my going concern about that company and the operation of the company for a period and comment those historical information of the financial statement are prepared on going concern basis and accrual basis. This is a very typical situation to understand. I'll give you one insight and example. Suppose you are forming of your Caro report. And in Caro, there is one particular line item where I need to confirm or answer in affirmative that whether the company is in a position to discharge or meet its liability in coming 12 months period or not. In Schedule 3, there are ratios in you are giving, and one of the critical ratios you are giving is current ratio out of few more, and your current ratio is negative. And if your current ratio is negative, what typically it denotes to? That means there is a question mark on my operational cash flows or revenue cash flows. So if these situations are there and visible with my historical numbers on which I am supposed to form an opinion, what about my assessment of those 12-month period? Now you think about a situation, typical client and audit situation. Say I'm doing the audit of 24-25. By the time I close my audit and issue my audit report, say August last week. And by the time I issue the report, already 4-5 months are gone of the current year. Now, SA 570 talks about assessment of 12-month period, starting with your finance balance sheet date. My balance sheet date is 31st March 2025. And I need to assess 12 months period about going concern indicators. If those indicators are available and those indicators are positive in right direction, then I can form the opinion. If the going concern indicators are negative and you are thinking that company is not going to survive in the future due course, they need to form your opinion different way. Then now you think about a situation, you are doing the audit of 24, 25, 5 months gone, you are remaining with 7 months. What assessment you will do? Now, what the new change is coming is this 12-month assessment period remains true, but this 12-month assessment period start with from the date of your financials approval. So it gives a larger window, larger time frame to assess it. So this is the change which you are talking of in SA 570 going to come, or we should become, because IS 570 has already incorporated this change. With respect to SA 570 existing situation, when it comes to management assessment, our evaluation is only restricted to events and conditions that are identified. If those conditions or events are identified, then I may go ahead and assess those situations. But when you talk about what globally is being done today or going to be done post December 2026, is that the auditor to critically evaluate the processes, methods, assumptions, and evidences supporting these assessments. Here, we are accepting those assessments and evaluating those situations. But there, you question those assessments, what the subjective factors gone in those assessments. Today, when you talk about professional skepticism, because going concern is very subjective, and professional skepticism has to be very paramount on the first seat when you evaluate this situation. In India right now, in context of SA 570, skepticism is required, but not emphasized to the same depth or document extent. But in case of the global 570, the robustness of the challenging those management assumptions is very paramount. So these are the fundamental changes, few changes are there. And one of the key changes in terms of reporting is concerned. If you read SA 570, it talks about reporting situations where it is required. And going concern as an element is always been considered as CAM when these conditions or ascertained uncertainty exists. And that CAM has to be addressed. And as per 570, they have given a demonstrated a para in that you need to show it. But when you talk about globally, going concern is not CAM. It is not a key audit matter. It is an absolute matter has to be dealt other than CAM. This is a fundamental shift, and it is going to go a huge way. When you talk about discussing about going concerns in India, it is about management. If management is not there, you go to TCWG. But when globally you talk about the going concern aspect has to be discussed with TCWG, even if you discuss with management. So these are fundamental changes what we are going to see through, and expectedly maybe sooner we are going to get the drafted versions of new 570. And when you talk about 570 going concern, the accounting aspect also getting changed with respect to impairment. But because when you talk about going concern and when there is a red question mark on the going concern aspect, you always question on the balances which you are auditing with, and the balances supposed to go for an impairment. And in case of impairment also, there are many changes getting to come in. And when you talk about impairment, the entire designing and disclosure requirement are also going to change in. Internationally, again, accounting standard 36, say Ind-AS 36 we are talking of, is again under revision. When you talk about disclosure and the structure of the financial statement, 118, again, that is under discussion and revision. So we are, of course, going to see those being adopted and required appropriate changes getting happening in Indian context, and sooner it is going to happen. So this is all about going concern. Please make sure that your assessment of going concern is absolute and appropriate. When you do the audit of any client, don't restrict your ears to the only to the numbers and what the management is showing to you. Keep your ears open to the environment in which both at macro level and micro level the company is operating with. Evaluate each information where it is available, in what degree it is affecting that company and the line of activity the company is getting into, and try to evaluate that impact is going to have on your numbers or the business activity. Once you figure out that whether those changes are going to impact your numbers, then your computation, your opinion formation is going to be easier. I'll give you, since we talked about it during our discussion, talked about EV industry. If you open news channels or news print media over last 4 5 months, there are every day some news is coming out on rare earths, and rare earths one of the very critical component in manufacturing of your lithium batteries, right? So how it is going to impact your operations? How it is going to impact your operations? Only day before yesterday, there is a news. I don't know whether somebody of you picked it or not. Bajaj, the number 2 player in EV scooter bikes right now, is going to suspend its operation by a month because they don't have the sourcing confirmation of rare earths for their batteries. So how it is going to impact? Today it could be 1 month, but you don't know what is the guarantee of resuming the operations after that 30-day closure period. How it is going to affect your situation as an auditor today while you certified 24 25. I'm just giving informations which are there in the public domain. There could be similar situations, there could be similar business line items in the news, and you never know how it is going to affect your companies. You think about a situation where your entire operation is based on lease accounting, and one of the major situations where that lease is getting cancelled. I'll give you one more example, in not in context of impairment or going concern, but it is more or less linked to this. If you try to recall 3 4 years news during COVID, it started triggering 2017-18, then it got concluded in 2021-22. It is related to one of the properties of Taj Hotels in Delhi. Suppose you figure out that you have a client who is having one property as a hotel, wherein the Delhi government or the development authority, the land on which that particular 5-star hotel is standing, supposed to get cancelled. And finally, it didn't got cancelled. They paid a huge renewal fee, which probably affected their financials. And I don't know, materially it is very impactful for Taj Hotel Group. But you think about a situation, in that kind of situation is there with one of your client, and instead of having 100 hotels, that client is having 2 hotels or 1 hotel. What kind of implications it is going to bring into the financials, and what kind of challenges it is going to bring into your reporting? So these are items which we should very critically be examined. And why I'm saying this, when you talk about going concern, you need to always evaluate the client and the news attached to it with a pinch of salt. Don't take the client and the information provided by the client at face value. You always think of that there is something into it. And the more reliance you give to the outside information and qualitative information, which in turn is going to affect your operation and the financial numbers, more better of you are. And always evaluate going concern on a very macro perspective before you go into the micro retailing. So that's all about गोइंग यस नीरज जी, आपका थोड़ा हाथ उठ रहा है, मैं देख सकता हूँ.
Sir, just in case from a legal perspective, say in
Yes.
insolvency matters,
Yes.
so either there is some default or the case has been filed or the case has been admitted. So in these scenarios, can you elaborate the going concern aspects and the role of the auditor in these scenarios?
See, I'm trying to put you in three different aspects. First scenario, think of a situation where you are the auditor of a client or the company. The company itself is going under liquidation, going into NCLT process, right? Second is you are the auditor of a company where the company is one of the biggest supplier or biggest stakeholder in say X company, and that X company is going into NCLT, not your company. Okay. Third situation, at what stage the NCLT process is in. Let's talk about the first scenario. You are doing the audit of a company, and for some reason, either the company has gone from its side as a corporate debtor into the resolution process, or the creditor or the banker have dragged the company into the resolution process. Now, there is no technical guide that what you should, it is the practice and it is the experience over last 6-7 years, particularly again post-COVID, those experiences also evolved, and those experiences also evolved in context of how the resolution processes also evolved. And I'm covering up this resolution processes, bringing in the latest bomb which got into one of the resolution processes with respect to Jharsuguda. Now, which is talk of the town and which is the talking point of entire resolution professionals. Now, what this the right way of doing it? If a company is getting into a resolution process, it is not necessary it has happened that day morning itself. There are few factors which has been there over a period of time and got into eventually into this situation. I just keep my fingers crossed and hope my friends, those who are into these situations, have not issued unmodified opinion previous year. Because when you go into resolution process, since we are talking about going concern resolution process, and especially in a good evening like today with among friends and in a form of association discussion, when a company goes into resolution process, many times it opens door for many things, be it forensics, be it a higher degree of scrutiny by respective stakeholders, and manifold. And new things come up before the auditors that these are happened. And you ponder upon those numbers and facts that, oh, this was there with that company, I didn't know. So it was not surprise, it was there. Because resolution process is a last resort where either the creditor or the company himself started looking into. And this resort is not immediate. This is not of that day's morning situation. There could be a different situations over a period of 1 year, 2 year. And how good you are as an auditor in those situations is going to safeguard you in terms of your reporting. And it also gives a direction in what you do the reporting. And if you see the reporting pattern of those companies, Invariably, the previous year in which the company was good, not into the resolution process, you find the auditor's report unmodified, and the year in which the resolution process get admitted, you find the auditor's report modified. Nothing has happened apart from this resolution. But what forced is that transaction which led to modification in the auditor's report are the transactions of that particular year? No, they could have good amount of legs in previous year. Good amount of legs previous year. Now addressing Niraji, your question with related to going concern. The regulators always try to resolute keeping the institution as going concern by carving out many things. So that gives an answer to our opinion formation when the subject under consideration is going to be resoluted and the solution to be reached out, keeping the subject as going concern. That means the operations are going to go through subject to certain carve-outs, subject to certain adjustment to making sure that business does not hamper and the larger economic aspect of the entity goes on. So the going concern aspect is not questioned. Yes, at many stages we have seen the intent of the regulator, intent of the process is to keep the entity as going concern. But end of the day, many times the resolution fails, and you have no options left out rather than going for a liquidation. So that time, your going concern comes into a question mark. But at the initial stages, my suggestion is, it is again personal. When a company goes into going concern, it is not obvious that resolution process, it is not obvious it was immediate. We would have taken care of last year by issuing modified opinions, even if not on going concern aspects, but other aspects. If I have not issued any modified opinion previous year, only thing I can do is to defend myself. That whatever report I have issued is absolutely fine under my assessment. So current year, keeping at what stage the process is, my opinion formation should move that way. There are cases, Neeraj Bhai, I won't take the name of those clients. In one of the clients where the resolution process took place in the year, the previous year we have disclaimed the audit report. Forget about making a qualification. We have disclaimed, made a disclaimer in the audit report. And I personally signed those accounts. And consecutively 2 years we have issued disclaimer of report. So the point is, don't allow your opinion formation to certain activities. Your opinion formation should be based on your activity, based on your judgment, based on your audit procedures. And we are capable enough in assessing a situation and understanding the business situations of any client or any company. It is not that the resolution process comes as a surprise. This is first. Now coming to the second leg, where I'm doing the audit of a client, which is a stakeholder in the company, where that company has gone into resolution process. What I'll do with my balances sitting in my company of that. So in these situations, what we generally advise, because there are public domain reports available, and the resolution processes available, that if you take the statistics of entire resolutions happened till now, you find a range ballpark figure of carve-outs. So you can, to that extent, you can go ahead and creating a provision of it to be very prudent in terms of numbers, because you never know what carve out finally will get it. But those public research papers will give you a degree of certainty or assessment of doing this. This is one aspect. Second aspect, if there is business transactions, one is the balances, second is business transactions. You need to evaluate those business transactions at that real-time basis. What has happened with, again, one of the practical situations, say the company in context is, say, one of the largest EPC companies in India, gone into resolution process, and there are subcontractors dealing with that company for executing those works. And in those situations, what has happened, many cases now it is happening, the contracts are getting sub-assigned. So your cash flows are not affected by the resolution process. The contracts get modified. So in that situation, you can very well space yourself that, okay, this company is in right side. The cash flows of this company are not going to affected by the what is happening with that company, except the balances which are getting carried on in the company. As far as operations are concerned, it is going to be safeguarded by this arrangement. So in that case, you can take a different call. But wherein you find the operation itself are getting challenged because of these situations, you can always think of questioning your evaluation process of going concern and take the appropriate call wherever it is necessary. Now, when you talk about going concerns, normally if you see the sequence of numbers, it is 505, 560, 570, and 570 is the going concerns. But I kept 560 towards the end subsequent events, because your assessment of going concern and the assessment of going concern based on informations, normally you get to know over the end of the period. It is not the during the period for which you are doing the audit. You come to know about that particular company while doing the audit, and therein the subsequent events comes in. And when you talk about subsequent events, we need to be thorough on few dates. What is my date of financial statement, date of approval, date of auditor's report, and date of the financial statements are issued. Why it is, at what point you are getting to know about the subsequent events, and what to be done with those informations varies at what stage you are discovering. And those stages are between the boundaries of these, out of these 4-5 dates. So there are 4 dates to be very critical about: date of your financial report, date of the approval of this report, date of your auditor's report, and finally the date of financial statements which are getting issued to the public. The degree of subsequent event which is going to impact your reporting and the communication will differ from one stage to another. So if we typically talk about situations, there are 3 periods. Sorry. 3 periods. Period 1 is between the financial statement date to the auditor's report date. That means, suppose I am doing the audit of 24-25 financial year, and my audit report date is say today, 30th July. So the first period is from 1st of April 2025 to 30th July 2025. This is period 1. When you talk about period 2, it is between after you issue the auditor's report and before the financial statements get publicly issued. Normally, typically, it is not on which you sign auditor's report, the financial statement gets publicly available to the stakeholders. It is typically the AGM date, because once the financial statements are approved in AGM, it goes public. So this becomes period 2. And period 3 is once the financial statements are issued publicly. So first period, second period, and the third period. So between these 3 periods, if anything happens, is called subsequent event, and the degree of this event influencing the reader and influencing your financial statement and your opinion differs at what stage this happens. Now let's talk about period 1. When you're talking about subsequent events, which is happening between the financial statement date and your auditor's report. And I bring in 2 standards, accounting standards here. The old school AS4 and Index 10 subsequent events. When you talk about subsequent events, 2 elements come to mind. It's adjusting event and non-adjusting event. If that subsequent event is capable of being an adjusting event, then you have no option other than revisiting your financials and changing those financials. If the event is supposed to be non-adjusting event, only a disclosure, appropriate disclosure in the financial statement will suffice. And these 2 elements can only happen when in the first period. That is, in between from the start of the financial statement date, say 1st of April 2025, to the reporting date when signing the auditor's report is today. So in between this period, if an event occurs and that event is material enough to impact a situation, then you assess that situation and evaluate that situation whether it is adjusting or non-adjusting. If it is adjusting, then revisit the financials, change those financials. If non-adjusting, only a disclosure in the financial statement will suffice, but you do it. This is in the first period. But the challenge comes in the second period and the third period. What about a situation where you have issued the auditor's report, AGM is pending, and something has happened? Can you revisit the financial statement? If no, what is available to you as an auditor? There are situations, practically we have seen, because of a situation in the AGM, the stakeholders sent back the financials to be reworked on. They have not approved the financial statement. There could be situations where, due to other activity not related to a subsequent event situation, financials could be back to the board that review. Or in case of typical PSU situations, CAG normally forces to change the financial statement. In those situations, what you supposed to do? And in case there is no change in the financial statement is required, as an auditor, what you supposed to do? In the first scenario, where there is a change, you need to change your auditor's report. Now, when you talk about changing your auditor's report, is it you are withdrawing your auditor's report and issuing fresh, or you are issuing a fresh report in continuation to the old report? Both possible, and you need to give a reference to the old report. In many cases, it does happen. There are dual dates, and you go ahead and issue that auditor's report. The practical insight and the challenge here is all about the UDIN aspect of these reports. What should be done with respect to UDIN? Normally, again, the normal parlance, we always create the UDIN, affix it to the auditor's report and finance statements. Caution: UDINs are only for the auditor's report, are not for the financial statements. UDINs are identifications numbers of your report. and financial statements are not your reports. And for every report, there has to be separate duty. So in a situation due to subsequent event, if you are issuing one more report in continuation to the older report, then evaluate that situation, issue the report appropriately, incorporating the situation leading to issuance of the report, giving reference to the old report with a separate fresh report. So two elements critical. You should explicitly mention about the event which gives a rise to the issuance of the new report, give a reference to the old report, and issue the first report. This is the second period case. And here, while issuing the second report, if required, thoroughly be sure that that subsequent event is materially, qualitatively, and objectively is of that degree which requires issuance of a new report. This is most critical to appreciate. Third period, you have issued the audit report and the financial statements approved in the AGM, gone to public, and you found out certain situations and you evaluate that situation that whatever report you have given is not appreciable in that manner. In that case, the first is you communicate. If you really find that some additional information is required, then you need to do a public communication. Otherwise, not required. I'll give you a typical example where I've been subjected to. It's a listed company, and probably this situation happened. It's almost 17 years now. One of the very glorified listed company. What has happened in that case? There is a compensating error in the cash flow statement, and it got uploaded both in NSE, BSE, and website of the company before the AGM, and the error got found out afterwards. So you need to communicate with whom you have said for the limited purpose, withdraw those statements, and all those things detailing has to be there in the report also, what led to those situations. So when you talk about subsequent events, it is not easy to evaluate those subsequent events in terms of your issuance of report and evaluation of subsequent events in going concern aspect. The more emphasis should be given on the going concern aspect and whether it is impacting your reader's point of view while they evaluate this particular event with the financial statement and your report. If that impact is there, then the onus is on us to make a right kind of communications post that subsequent event. Again, the degree of communication varies at what point the subsequent event got evolved, and second is in what degree it is going to impact your going concern or otherwise. There are many ways of evaluating the subsequent events. One is internal, another is external. I'm sure that, again, as I said at the beginning, these few standards been overlooked over the period of time. There are proper processes are written in the auditing standards, how you evaluate subsequent events. And one of the area of evaluating subsequent event internally is, have you checked the trial balances from 1st of April till the audit report you have signed? Nobody does that normally. Because that gives you an indicator of what subsequent events are, what is happening with the company financially and operations. Nobody sees the MIS report of the company post the audit period, because I am doing the audit of 24-25. Why should I see the operational MIs of Q1 25-26? It is not my audit period covered. But when you talk about subsequent events, going concern, yes, it is. It forms part of my domain to look into. So those few things we need to be very critically appraised of. And yes, we need to keep our eyes and ears open about the news which are getting circulated around the environment related to that particular company, related to that particular industry. We should not restrict ourselves whether that news item is only related to that company. We also look into news items which are relevant to that particular industry, because you will never know how your company will get into that environment. So these are very subjective, qualitative aspects. We need to be more open about it, and we should create a robust documentation process, how I'm monetizing, how I'm reading those informations, how I've got the source of those informations, and what are my conclusions, and what are the basis of those conclusions. These are going to be critical, and we should be doing it part of our audit documentation. Otherwise, going forward in this first pressing world, especially with new age companies, unless I adhere to this particular two particular standards, 560 and 570, my audit conclusions are not going to be reasonably foolproof, because these two standards normally you overlook it and don't give that kind of importance. But in today's scenario, these are two more critical standards to get into. And if you want to be bulletproof in terms of your audit deliverables, please kindly look into this application of these two standards, 570, 60 and 570 in particular, so that you can have a quality deliverables. So I think in nutshell, in a brief way, we have covered 505, 560, and 570. Subsequent events, going concern, and external confirmations. I'll be sharing 3 PPTs, which more or less summarizes in table and bullet points. You can refer to any things apart from this. I'm always there to help you out, and so that I can learn my bit of things from you. Open to Niranji.
Thanks a lot, sir, for this beautiful deliberation on this very important topic. Let me open this forum for any queries from the participants. So if anybody has got any questions, Swapnil, are you there?
No, yeah, Swapnil Via is not there.
So if you can unmute all, so that they, if they have any queries, they
Yes,
can.
everyone can unmute themselves, sir.
So any queries by anybody on this topic, on the going concern aspect, on subsequent events? Sir, there doesn't seem to be any questions, so I think it's beautifully explained by you in terms of the different scenarios. You covered the different aspects, covering a lot of practical examples, and also your own personal experience. So I think that has been a wonderful deliberation on this topic. I request Parag to give a formal vote of thanks to him.
Thank you, Via. So on behalf of VIP Road Chartered Accountant Association and all the participants, I extend our heartfelt thanks for making this session so informative. Thank you, sir, so much for such a wonderful deliberation. We have really gained a lot of knowledge through your session.
Thank you so much. Thank you, Nesbhaiya. Thank you.
And just for the participants, tomorrow being the 4th day, we will be having the topic on risk-based audit, materiality and sampling. Same time, which is 5:30 to 7 p.m. So looking forward to seeing you all tomorrow again on day 4. And our guest speaker will be CA Kamal Garg. Thank you, sir. Thanks a lot.
Bye-bye.
Thank you.